What's up, guys? It's Das here. So the stock market had a pretty choppy day today. S&P 500 down 7 points, down about 0.2%. The Dow Jones down 220 points, down 0.8%. And the Russell, the small caps, down over 1% today, down about 16 points. And get this, guys, is it really a surprise at this point? The NASDAQ went up 114 points. It went up about 1%. And again, that's not surprising. And in this video, we're going to be talking more about the stock market here, breaking down some technicals, going over the top stocks that I'm actually looking to buy as we're getting into this fresh month of September here in 2020. And I also want to break down what I've been doing. What stocks am I buying? What am I trading here? And just in general, some thoughts on the market, where my head is currently at right now. So a lot to go over. If you guys find value in the video, hit that like button for me. Consider subscribing to the channel. Check out our free Discord chat, free Facebook group, link down below in the description box. And you can also get 2 free stocks from Webull. Those are valued up to $1,400. Also linked down below, and by the way, that runs out here on the 1st of September, so make sure to get your free stocks. Deposit $100 into that account using that link, and you get 2 free stocks, and I also get 2 free stocks since it is an affiliate link. And now enough with all that jazz. Let's get into the video and talk about what happened today. And again, it was a choppy day all over the place, and the S&P, as it went down 8 points at the close of the market, it still hit an all-time high. It still hit an all-time high with about 10 minutes left in the session at 35.15. And you guys noticed that we actually held 3,500, which was a pretty strong support all day today. So it is very obvious that despite the S&P 500 here going down, the bulls still won the day. It is very, very obvious, and especially as I pull out here to the 5-day, 5-minute chart, you guys can see it for yourselves, right? It is extremely obvious. We held 3,500. That was a resistance last week on the 27th of August, on the 28th of August, right? We struggled at 3,500. Then we ended the week off with a massive rally, right, from 3,500 up to 3,510. That's not massive. I'm exaggerating a bit, but the bulls took over to close off last week, and that was bullish in itself. And it really remained the bullishness. I don't even know if that's a word, but that bullish move from Friday, it carried over into today because we held 3,500. Like I said, we pulled down this morning, held it. We pulled down earlier. We broke below it a little bit, but ultimately we got back above 3,500. We held the 180 SMA here on the 5-day, 5-minute at a higher low as a support, which shows bulls are in charge, right? So overall, this is looking strong. And it's despite us having a red day. It doesn't matter that we had a red day. The bulls are still in charge. So for tomorrow, for the bulls to remain in charge, 3,500 needs to hold on the S&P. If 3,500 holds, we start rallying mid-35, 10s, 15, 35, 20. That could be where we see another leg up here in the S&P. I know it's crazy, but we had a couple days of consolidation, it seems like, and we could be getting another leg up. And let's say 3,500 doesn't hold. Let's say we break that. We gap down under it aggressively even. That could happen as well. I've been saying a level that we could pull down to, maybe, just maybe, is around 3,400, maybe 3,420, maybe 3,450. So if 3,500 breaks, that could be where we do end up dropping to. And in terms of the Dow, 220 in the red. We're pulling down in the middle of this channel with resistance at around 29,500, which is the all-time high, and support around 28,200. So we're trading in this 1,300 point window, and it seems like we're getting closer to that support now today with the pull down, right? So watch out for 28,200. That is around 200 points below from where we are now. That is most likely, in my opinion, guys, at least where the Dow Jones is going to find support. And you guys can clearly see it here on the hourly. We're already seeing support at 28,400 on this hourly chart on this 50 SMA. So let's say this breaks. That is where we might see 28,200, but don't worry, guys. Don't be like, oh, the bears are taking over by any means, because bulls are still in charge. This is simply a healthy pull down, and mind you, the Nasdaq has been, or the Dow, actually, I'm talking about the Dow here. The Dow has been ripping for the past a couple days with no big pull downs. Literally no big pull downs. Maybe this day you could argue it pulled down a little bit, but ever since the 19th, it's gone straight up with minimal pull downs, and that is from 27,600 up to about 28,700. So it made a move of about 3-4% in the past couple of days. So it makes sense that we're seeing a bit of a retracement here in the Dow. And the Nasdaq, like I said, it doesn't surprise me that we're going higher. We're up over 100 points, up about 1%. We broke out of the $12,000 level of resistance. Big level of resistance here. You guys can see it on the 5-day, 5-minute. That is where we failed breaking out of on Friday. We talked about that on Friday, and it's been a resistance from the 26th of August. So 1 day on the 26th, 2 on the 27th, 3 on the 28th. So 3 days of resistance, and today's gap up, breaking out of 12,000 and eventually out of 12,050. That was very, very bullish. So all-time high here on the Nasdaq at 12,167. And now, guys, it seems like the Nasdaq is getting closer and closer to officially doubling off of its lows back in March. You know, that is unbelievable. It went from 6,700 up to about 12,000, so it's not a double quite yet. It's got to get to about 13,500-ish, right around there. If it does, that is going to be a double on the Nasdaq. It could be under a year. Who knows? It could happen in under a year, which is just unfathomable. That is just ridiculous, and it's just the reality that we're living in right now, guys. And I'd love to know what you have to think down below in the comments about the markets, where we're headed. But at this point, we're overbought, no doubt about it. But the bulls are still in charge, and we're at a point where we could go even higher with the state of how the stock market has been now, where everybody's like, stocks can't go down, they only go up. So it's just an interesting spot we're in. You guys got to be careful. Always be prepared for any situation, like I've always been preaching here on the channel. Have cash ready to go. If you're in doubt of a position, you're up on the position, maybe trim some profits, go to cash as the markets are at all-time highs. You don't always have to be fully invested, right? If you feel like something's coming, you could end up locking in profits and playing it safe, right? Just understand anything could happen, and to always have different options of what you're going to do in any situation, right? The big key is not to be blindsided by the stock market, because trust me, guys, that sucks. That sucks. You always got to be prepared for everything. So let me know your thoughts down below in the comments, and a couple of things to keep an eye out on for this week. Really, one main thing I'm watching that could alter the stock market later this week is the jobs numbers. We're getting the jobs numbers for August here on Friday morning on September 4th. I believe that comes out at 8:30 a.m. Eastern Standard Time. So we'll see how those jobs did. I believe in June we had a very great month. Or was that May? May or June we had a strong jobs report month, and it dropped off the month after. It was a bit of a disappointment. Now we'll see what happens in August. That's going to be very important in terms of, again, the stock market. It could end up shooting up the markets, selling off the markets, depending on if we beat or miss these numbers, jobs numbers, comparing to analysts. We'll see what ends up happening there, but watch out for that. And in general here, kind of these different earnings. We're going to talk about some earnings here in a couple of minutes, but yeah, watch out for those numbers, as these economic data points, they can alter the markets. And as always, the jobless claims numbers, they come out every Thursday, so that's going to be interesting as well. And as for me today, guys, I didn't do much. You guys know, or, well, you new viewers, you might not know, but for those that have been following me for a couple days, couple weeks, you guys know that I'm in Apple. I got into Apple pre-split, and I was buying in the low 500s. I bought some at 505, bought a little bit at 496 or something, and overall my average cost was right around 500. And now the split went through. It went 4-1 through, and you guys can see the shares are trading at $129. And my position, I saw in my Fidelity app, it is around it's $125.97. So that's exactly where my average cost is right now. And I'm up on the position. There's no doubt about it. We're trading at $129. I'm in at about $126. Let's round up. So I'm up around $3 per share on this position, up about 2.5%. So I'm happy with it. I didn't lock in profits. Quite honestly, I think Apple's going higher, so I want to have my swing position open to gain on that potential for it going higher. And sure, I could be wrong. I could lose money. It could happen. It's happened before, but I am going with my guns here that Apple's going to see mid-130s this week, maybe even 140, maybe. I don't know. I don't have the crystal ball. I wish I did, but I'm holding on to Apple. I'm in at about $126 per share, and Workhorse, guys, was quite the workhorse today, up 11% almost, and if you guys were watching it earlier in the day, it was almost at $19 per share. So we hit $19. We sold down about 18.11, and the stock still went up almost 11% on the day. Unbelievable. And this is because they announced strategic agreements with Hitachi America Ltd. and Hitachi Capital America Crop to assess Workhorse's manufacturing and supply chain capabilities. Excuse me, guys, little voice crack there. Capabilities. And why would they be doing that? Is it because they're expecting a big order or a massive amount of units to be manufactured? That could be a reason, guys. That could be a reason, right? And this alliance with Hitachi comes at an ideal time for Workhorse as they value the best-in-class innovation and experience in ramping up production and enabling and providing a complete solution for the customers, said CEO Dwayne Hughes. And with Hitachi's innovation and invaluable expertise in EV technology, smart factory automation, and digital technologies, Workhorse is primed to build on their early leadership position as the only last-mile electric vehicle distributor selling vehicles for commercial use across the country. So this is good news. Investors love this. The stock, again, went up 11% on this news, and this is telling me, hey, they're gearing up for something big, and I'm loving that. And for me, I'm in at around $16, $16.10 average cost, and I'm still holding, guys. I'm still holding. I think we're going higher on Workhorse. I think we could be seeing $20 per share. Maybe not this week. It could happen, who knows, but sometime in the future, I think $20 per share in the near-term future is very possible. And I'm also in Foot Locker, in from last week at about $29.60. We went up over $30 today, closed at $30.33, so I'm up on my position, but ultimately I'm nowhere near selling out of Foot Locker. I want to let this one run a little bit because I think if it can break out of 30, if it could crack $31 even, big resistance, both of those levels, I think Foot Locker's bound to be a mid-$35 stock, even higher. So I'm in a little bit under $30, $29.60, and I plan on adding more at around $31, $32, and hold it for a decent amount of time. I think there is a lot of potential here. And I'm also in Upwork, UPWK, up about 1% today on Upwork, and I'm in at about $14.40, doing pretty well in this position, but I am in it for a break above $16. That's where I think a big move is coming in Upwork, and until we break out of there, I'm holding on to it, and I'm just waiting to lock in those profits because I think if 16 is able to break, that is where we might see a big move up to 17, and that is where I'm interested in locking in some of those profits. And I still have my gold positions open. GDX, which is a gold miners ETF, did pretty well today, up almost 1%. And GLD, I'm also in this one, which is a gold ETF. It strictly tracks the price of gold. It's not a gold miners ETF. So I want my exposure to gold by having GLD and GDX in the portfolio. So So those are the main ones that I'm in as of now. And I'd love to know what you guys are doing down below in the comment section. Let me know, as I love talking to you guys every single day in the comments. And speaking of talking to you guys, don't forget to join our Discord chat. It's free. Link down below. Our Facebook group, it's also free. And you can follow me on Instagram at StasserFest if you guys want to see daily updates, call-outs throughout the day, and just my life in general, what I'm doing. Follow me at StasserFest on Instagram. So let's get into some other stocks here, some earnings reports. We had Zoom report today, revenue of $663 million. EPS came in at 63 cents, and they see the Q3 revenue of around $685 million to $690 million. So they see next quarter even better than the current quarter that they just reported. And they see $2.37 to about $2.39 billion of revenue for the year of 2021. So very solid numbers there in terms of Zoom. They had some good guidance as well, and they had approximately 370,000 customers in quarter two, guys. And get this, that is up 450% year over year. So the stock went up 8% today, and it closed at 325. And get this, guys, after hours, it's up to 380. It's up to $380 per share. Oh my God, Stas, why didn't you buy Zoom? Why didn't you buy Zoom? It went from $300, now it's at 380. So that made a move of about 20%, 25% in the span of one day on these earnings. And I don't like playing the shoulda, coulda, woulda game, guys, because it's just, it'll drive you crazy at the end of the day. But I wish I bought some Zoom, but then again, it goes against one of my core trading principles of not buying before earnings. I don't like playing that game, so I probably wouldn't have bought Zoom anyway, but for those that did, congratulations. So Zoom's doing very well. I probably won't touch it here. I would look for a pull down. If we get a pull down, I might jump in, so we'll see what happens there. And Docusign, DOCU, is another one that didn't report earnings, but it's reporting this week on actually the 9th or the 3rd of the 9th month of the year, which is September, guys. So they're reporting on Thursday, and it seems like they're going up after hours. Is this because Zoom's going up? It very well could be. Docusign up 3% today, and it closed at 223. Now it's up to 232 after hours, so it's up even more. So watch out for Docusign moving forward here. Any pull down, I would be interested in probably buying some shares. We'll see what ends up happening there. But overall, Zoom, Docu, those are the main ones that I'm watching as of now, earnings plays and so forth. And drop a comment down below if there's other companies that you're watching that are reporting. Now let's go over some other stocks that I'm looking to buy right now that did very well today and that probably will continue to be good opportunities moving into September of 2020. So AMD was up 6% today, up $5.30, bouncing beautifully off that 50 SMA here on the 4-hour chart at a higher low, and it just ripped, guys. It ripped, and the volume wasn't that strong. I mean, comparing the volume back to where it moved from $50 up to about 90, it wasn't strong at all, but that makes sense because this move was ridiculous from 57 up to 90, so it makes sense that the volume isn't as strong right now, but still, this move up to 90 was strong in itself. I mean, it broke out of the 87 resistance. That was big. It broke out of 88 as well, which we struggled a little bit at. So at this point, AMD, I would love to enter as a pullback play maybe. If we get a pull down maybe to about $87, $88, this old resistance as a new support. As you guys can see here on the hourly, if we pull down, maybe test this right here like I'm drawing on the trend line, and then we end up popping off of it, this could be a nice potential move on AMD from 88 up to mid-90s. That could be roughly 6 to 10% potential for profit. So I'm watching AMD very closely here. It's one of those stocks that's very hot right now. It's risky. It's a bit risky, but there's a lot of reward as well, in my opinion. And another one here that is in a situation similar situation to Intel, which we talked about yesterday, which is another one worth watching. Shout out to Intel here, guys. From $50, I think it could end up getting back up to the mid-50s, especially with the bullish momentum we've been seeing these past 2 trading days. But another one similar to Intel, which has not broken up quite yet like Intel has these past 2 days, is Cisco. Cisco has been consolidating at about $41 to about $42 ever since the middle of August, the 13th of August to be exact, right? All the way up till now. And that was from a drop from $48 on earnings report, guys. The earnings were decent, nothing crazy, kind of bad. It went from 48 to 42. Now we're consolidating. Excuse me, guys. And, I'd like to see a pop. We saw Intel gap up. If we see a gap up on Cisco, it's a 42, 43. That could be a potential buy-in on the momentum. And I think it could rally up to $44. I think that is where Cisco could end up heading to, and filling this gap that you guys see here on the 4-hour chart. Let me zoom in a bit so you can see it even better, right? From 42 up to about 44. That's roughly a 5% move in store. So watch out for Cisco. And guys, get this, Tesla. What else is new? Tesla split went through, and it went up 13% today, up $55. The stock hit $500 per share at the close of the market. And it ended up going from $440 to about $500. So the split went through, Tesla went to $440, and it ran all the way up to $500, and it closed at around $498, and now it's up to $520 after hours, guys. I mean, does this thing stop? This is unbelievable. This is like a pre-split price of what? Let's multiply this by 5. Now Tesla's at about $2,500 pre-split. I think this thing has a chance of running straight to $3,000, which could put the stock at $600 after the split. So maybe we run straight to 600. I mean, that would be unbelievable, but I wouldn't put it past Tesla, right? I would not be surprised if we saw a bit of a correction, maybe, and then run up to 600. I think it's happening, guys. So I'm watching Tesla here, and NIO is another one that I'm kicking myself, kind of like Zoom. Although, again, I don't buy Zoom, or I don't like buying before earnings, so Zoom was out of the question for me anyway. I'm just kind of joking around there a little bit. But with NIO, I am kicking myself because I was watching NIO earlier. It was at about 1680, low 17s. I was watching it. And quite honestly, I was waiting for it to go lower. And sometimes when you do that, you miss out on opportunities and you learn lessons. And I've learned this lesson before, but sometimes you got to learn the lesson again. I should have taken a position here at about $17.50, $18, but I didn't, guys. I did not take a position, and ultimately NIO ran all the way from 17 to $20 now. It's pulling down at $19 flat. So overall, I mean, it's bullish. Low key, it broke out of this resistance, right? You guys can see, and this is what I was watching earlier on the 5-day, 5-minute. We broke out of this channel, but I should have taken a position. That is where I should have taken another position, or that was my second chance when it broke the channel, but I didn't, again, guys. But overall, I was nervous to get trapped at around this resistance, but either way, NIO is bullish. It's breaking out of the channel here. We're in the 19s. I think from 19 to $20, 21, I think that's going to happen this week, quite honestly, with the way the technicals here are looking on NIO. It's just very, very bullish. And if we break under 18 again, that could be a sign we're going lower, but as of now, the bulls are in charge. And Dollar Tree is another one. DLTR. Dollar Tree did very well on earnings, 110 EPS versus 92 cents. They beat their revenue, came in at $6.28 billion versus $6.2 billion. That's up 9% year over year. Same store sales came in at a growth of 7.2% year over year, and they have about $2 billion in cash right now. So Dollar Tree, and they've dropped about $12 after earnings. So Dollar Tree's looking pretty interesting. And today we were up about 2%. So I'm thinking if Dollar Tree can break out of, let's say, $97, I might end up entering a position there and maybe buy some call options. I have to take a deeper look into the options chain on Dollar Tree, but I'm bullish. I think there's a lot of opportunity, especially above 98, 97, and especially above 100. If we break 100, guys, that is where Dollar Tree can take off again, kind of like it did about last week. I mean, last week it went from 98 up to 110. Now we're trading at about 98 again. So 100 back up to 110. I can see it happening. So watch Dollar Tree and Virgin Galactic as well. SPCE is looking pretty bullish. Today up 2.5%. Earlier in the day, it was up above $18. And you guys can see we pulled down. We held 1750. We rallied off of that low. And we actually confirmed, you guys can see here, the support at 1750 today. And we're slowly creeping above the main moving averages here on the hourly chart. So slowly but surely, Virgin Galactic is getting bullish here. And I'm liking it. I didn't buy in quite yet, but I think anything above $18.50, $19 on the stock, especially above 19, I think we can see a lot of headway moving forward. Maybe back up to the 20s, low 20s, 22. I think that is where Virgin Galactic could be heading. And another one that's pretty bullish is Coca-Cola. We gapped up this morning pretty much all the way up to $50. We filled that gap from $49 to $50. If we zoom out a bit to the 4-hour chart, you guys can see it. That's a good sign. That is a good sign. But for me to get into Coke, I need a break out of 50, guys. I need a break out of 50, which it struggled there in the middle of April, in the middle of June. So I'm thinking if we break 50, Coke is going to be smooth sailing up to about $52, $53. And that is more of a quote-unquote safe stock to swing trade. I mean, there's no very safe stock out there. There's risk involved with everything. But Coke, I would be able to put my money in it and kind of chill and not think about it for a while and be okay with it. That's kind of the stock that it is. So overall, that's it for this video. Hope you all enjoyed it. If you did, hit that like button for me. Consider subscribing to the channel. Hit that like button for me. I said it twice there, guys. And also comment on the video. Let me know your thoughts. And don't forget to claim your 2 free stocks from Webull, valued up to $1,400. Deposit $100 using my link, and that is when you get the 2 free stocks. And remember, this runs out on the 1st of September, so make sure to go do that right now. And I do appreciate you, as that link, the link you use, helps me directly in all the free content that I'm putting up here on YouTube. So I'll catch you all in the next video. Thanks for watching. As always, peace out.